It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey, it's Tyrone Jackson, the wealthy investor, and thank you for joining me for another great episode of Trading Stocks Made Easy. Now, today, we're going to talk about setting goals if you already have a trading account. I know that a lot of you not only listen to this podcast, but you're also subscribers at witradeschool.com. That's witradeschool.com. And that's the online version of the Wealthy Investor Program if you don't live in New York or Los Angeles and can't make live classes. So as a subscriber, you know, we have this thing at WI Trade School that's all about Wednesdays, right? Where I answer your trading questions. I post new videos to the website, and we really go week by week by week with the market. And there are a couple of things that I want to point out here because our subscriber base is constantly growing there. And many of you who are members of WI Trade School, you're already at, let's say, the $5,000 level. You're making $7,000 or $10,000 a month, and that's all good. That is the reason for having the Wealthy Investor Program online. But if you already have a trading account, there's some things that I do want to talk to you about today. One is setting financial goals. The next is picking your trading styles. And number 3 is never, ever, ever gambling in the stock market. So let's jump right in, and hopefully some of the things that I want to share with you in today's episode will point you in the right direction and keep you on track. So if you're already earning $2,000, $5,000, $10,000 a month, the question is, how are you doing that? Well, most of you are doing that through covered call writing. And that's very smart because you know that no matter where a stock goes, up, down, or stays the same, goes up, goes down, or stays the same, you're always collecting covered call income. Now, the one thing that I see a lot of people doing is saying, Tyrone, I want to make a lot of money in the stock market. I want to make that monthly or weekly residual income that comes from covered call writing. And a lot of times I say to people, and I notice this no matter what city I'm in, this is always the same. I say, well, how much do you want to earn? Okay. And we call this knowing your why. How much do you want to earn? Well, I want to earn $5,000 a month. Or if I could just hear someone say all the time, if I could just earn $5,000 extra from my trading account, that would really help me out. And so very often for those people, I put together a covered call strategy that allows them to earn the $5,000 a month. And once they hit that goal, I say to them, why do you want to earn this money? Now, this is really important because as a trader, if you don't know your why, right, you're just always going to be clicking inside of your account, but never fulfilled. So why do you have to have a monthly income target, a monthly goal? And why do you have to know this why? Because it gives your brain something to focus on. So for example, if you wanted $5,000 a month because that would pay your mortgage and your car payment and your student loan, if you ever needed money, that is a perfect why. You see, your brain really needs something to focus on in terms of trading. In other words, you really need a goal, and you have to be very specific about what that dollar amount actually is so that you could use a strategy like covered calls to actually achieve that. Now, what I'm noticing for most of my students is most of my students want that supplemental income just in case something actually happens and they lose their job or their spouse or partner loses their job. They know that they have that income coming in from the stock market. There are certain stocks that we trade that allow us to pull in consistent income plus dividends. And what I have found with the Wealthy Investor approach, many of you really, really like it. And of course, I like it too. That's why I teach it. So knowing that why is supremely important. A lot of people say, I want to be rich. I just want to be rich. Okay, well, rich means something different to each and every one of you listening right now, right? For some people, rich is $15,000 a month in trading profits. For other people, it's $100,000 a month in trading profits. So rich is a broad term. And here's something that I've been speaking to a lot these days, which is, again, it goes back to that why. Why do you need that specific dollar amount? Why do you desire that specific dollar amount? And for some people who are college educated, who come to my program, who wind up trading, they just want that extra income because they're trying to pay off their house, or they're trying to pay off their car, or their kid goes to private school and they want the money to come from the stock market to pay for that private school education. You see, my most successful students are very specific with the money that they want to earn, and they're very target focused. Now, I have learned as a teacher, the more that I get you to focus on a specific dollar amount, the faster you will get there. Now, this also happens because I get a lot of emails on this one. Hey, Tyrone, I have $2,500 to start trading and I'd like to make $100,000 a month. Well, no, you are probably not going to hit that goal. What we like to achieve is anywhere between 2% or 5% each month. So for example, if I had a $100,000 trading account, it would be totally reasonable if I'm using both my money and margin to be able to generate $2,500 to $5,000 per month. If you open a brokerage account with $2,500, it's going to be very hard to get rich, which brings us to the next step in setting your goals. If you only have $2,500 to get started, there's nothing wrong with that. People get started investing in the stock market with that all the time. But then you have to put yourself on a payment plan. And you hear me talk about that a lot on this show. How much money are you willing to put in your brokerage account on a monthly basis? Remember, if you're going to be a successful trader, one of the things that you're surely going to need is something called discipline. And wealthy people have discipline, and they're constantly adding to whatever amount that they have as their money makes money. So just to say I have $2,500 in an E-Trade account and I want to be rich, right? Not the greatest thing to focus on. What you need to focus on if you open an account with $2,500 is how much more money you're going to put in on a monthly basis to help you get to your first dollar goal. So you cannot skip a step if you want to be a successful trader and investor. Really, really important, because life requires, if you want to be successful, that you always have a goal that you're able to focus on. It starts out in baby steps and then it goes on from there. Now, the next thing that I wanted to talk to you about, and again, this is sharing some ideas, and I'm assuming on today's episode that you already have an account, you're already in the market. Number 2 is to pick your trading style. Now, what do I mean by that? Obviously, you hear my students come on the show and they're always talking about covered calls again, because it's that one trade that is very, very, very consistent. We lower our risk as a covered call writer by selling call options on S&P 500 components as well as the Dow 30. So if we're choosing companies that are members of the Dow Jones Industrial Average along with stocks that are members of the S&P 500, you see, these are established companies. I don't mind jumping in and out of these companies because they have strong earnings, they pay a dividend, and most importantly, Wall Street likes the stock. A lot of people buy a stock and they say, I have a feeling, I have a hunch that the stock is going higher. Well, feelings are for relationships. Hunches are for detectives, okay? Just so you know. What we do is we choose stocks that have a tendency to go higher. And anybody who's done any of my webinars, you know that I like stocks that are in strong upward trends, both in the long term and in the short term. So that is our style. So a lot of people choose stocks based on feeling and hunches instead of an established pattern, which is what I like to use. I want to say one other thing here about penny stocks, stocks that are generally $7 or less. This notion that you're going to buy a $7 stock and within a year it's going to be a $120 stock, statistically, that rarely happens, just so you know. Most stocks at $7 will go down for several reasons. Number one, those stocks are easily manipulated by other traders and bloggers who are telling you to buy the stock because there's some news coming out. And when you're driving it up, or when millions of other people are driving it up, guess what? They're selling it off. We call this in the stock market pump and dump. Now, there are some traders out there who have some really, really good skills when it comes to penny stocks, right? And there are a few people who I know who are really legit in teaching penny stock strategies. But penny stocks require that you do an awful lot of research in order to be successful. So let's say you actually have a job and trading is something that you do on the side. You can't sell covered calls on $7 stocks most of the time. And then there's a lack of information in the marketplace telling you about what's going on behind the scenes, revenue announcements. There are no dividends, right? So you put yourself in the highest risk category when you trade stocks that are below $10. Now, I've been seeing a lot of this on my Facebook page, by the way. A lot of people are writing in saying, hey, Tyrone, I love your work, but I want to start buying marijuana stocks. And I have to bring this up now because a lot of people think they're going to catch some marijuana stock at $7 because this company, dispenses the machines where this legal marijuana is. There's going to be a vending machine someday, and you put, $10 in, and you'll be able to get a dime bag. Don't ask me how I know that phrase dime bag. It just, trust me, it's shown up in my life. There is no miracle marijuana stock at this time, and there probably won't be for a long time unless we get one of the larger pharmaceutical companies to somehow come up with some sort of medical reason why they can sell marijuana in large quantities. So trying to catch a trend like marijuana stocks on a $5 or $6 stock, statistically speaking, you're wasting your time. If you're going to be successful in the stock market, you want to do a strategy, or you want to engage in a strategy that has worked consistently over time. And that's what I love about the Wealthy Investor approach. Remember, we call them in the Wealthy Investor program good dates. We only date stocks that are of established companies. Why? Those companies have been around for years and years and years. There's lots of institutional money in them. Perhaps they pay a dividend, and they're very transparent. You want to be able to look up a company's financials online and be able to read it and find out how they're generating revenue. Why? Because these are huge, multi-million, multi-billion dollar companies, and they have to disclose all of their information to the public. Therefore, they are lower risk. Are you starting to get the picture? Some people like trading primarily stock splits, right? So what is a stock split? If XYZ stock is trading at $100, the board of directors says, you know what? The average investor is not going to buy our shares once we cross over $100. We want to make it more attractive to the average investor, also known as the retail investor. And believe it or not, sometimes boards compete for pension money, right? So if you take a stock that's $100 a share and you break it into 2 shares of $50, wow, that gets the public's attention and that gets institutional investors' attention. And so some people like to take that stock that's at $100, wait for it to split, and then ride it back up from $50 to $100 a share. Now, I have seen this work a lot. The only problem is in recent market history, we haven't been getting a lot of stock splits. So I love stock splits. I love trading them, but we haven't been getting a lot of them in, let's say, the past 2 to 5 years. So although that's a very fruitful strategy, guess what? That strategy is not in play right now. Now, the other thing that actually happens in the stock market as it relates to picking your style is that markets change. There are times when technology stocks are really hot or pharmaceuticals are really hot. There are times when transportation stocks are really hot. And there have been times when social media stocks are really hot. Okay, so in the social media space, most of the companies that went public have not done well. So that would not be a very good space to kind of play in. What I'm finding in the market in the last 2 years is you really want to be in multiple spaces, right? So that may be, we don't trade pharmaceuticals in the Wealthy Investor program, but that may be a company like Starbucks, right? It could also be Coca-Cola, Pepsi-Cola, or McDonald's. Not all of those stocks are in favor, and that's why you need to do research. That's why you need someone who's going to guide you through this process so that you are aware when a trend in a particular sector of the market actually changes. So you see, building wealth, trading on a monthly and consistent basis for income, it's not the hardest thing in the world, but you will probably need a guide, someone to model yourself after, with a strategy that you can do that suits your lifestyle. So for my money, penny stocks just don't fit in to that. Now I'm going to come back and give you some final remarks on increasing your trading and investing success right after you take a listen to this.
You're listening to the Trading Stocks Made Easy podcast. Want to learn more about how to trade and invest in the stock market? Visit thewealthyinvestor.net/products. That's thewealthyinvestor.net/products and order the Wealthy Investor's Guide to Stock Market Success audio series. This easy-to-follow 5-CD audio series and manual will teach you the basics of how to buy and sell stocks, how to collect quarterly dividends for life, plus hidden income generating strategies like covered call writing and volatility trading. Start creating financial freedom right now. Get the financial education you need to get ahead. Visit thewealthyinvestor.net/products.
Wealthy Investor, Wealthy Investor, wealthyinvestorradio.com.
And welcome back to Trading Stocks Made Easy. Of course, it's still me. I'm still here, Tyrone Jackson. All right, in this particular episode, we've been talking about steps for creating your trading success. And in this episode, I'm assuming that you already have an account open and you already own shares. And I'm also assuming that you're a member of witradeschool.com, which is the online version of the Wealthy Investor Program. So we talked about setting some dollar goals so that your brain has something to actually focus on. And we talked about before the commercial break, this idea of picking a trading style. And we know that searching for the latest marijuana stock is probably not going to get you very far in this marketplace. Well, the final thing that I wanted to share with you is every once in a while, we get a stock that's a really good trade, and then we get a stock that's a really good investment. Now, I've talked about this in other episodes, and right here, I want to make the distinction. An investment is a stock that you're willing to hold for 5 years or more because you think it will be higher than where you've purchased it now. You see, all investing, whether it's stocks or real estate, is all about the future price of the asset that you have just purchased. Most people purchase stocks as investments because we believe that stock will be higher. Some people believe it'll be 20% higher, let's say 5 years down the line. Other people think it's going to double in price 5 years down the line. To do that, again, you're going to have to do some research or get introduced to some research or methodology that actually fits your forecast. All right. So when you have a stock that's done really well for you over, let's say, a 5-year period because it's doubled, it's gone up 100%. It went from $90 to, let's say, $180. How long do you hold that stock? And very often in my program, I talk about wealthy people versus middle-class people, because what I have discovered is middle-class people buy stocks and they have no idea when they're going to sell them. Whereas the rich know when they're actually going to take profits. You see, wealthy people always have a plan for their money. And when do we know when it's time to break up with that stock that you're dating? And the answer is really simple. It's when the company ceases making money or a profit on an annual basis. Which brings us to the third most important rule. We never gamble in the stock market. We never just throw money at a stock and just hope that it rises. You see, as long as you're following fundamentals, and what that means is the amount of money that the corporation is earning on a quarterly basis every 13 weeks, and the amount of money that a corporation is earning on an annual basis, as long as those numbers are growing, there's a 90% probability that that stock that you actually like will continue to rise in value. I always say, please don't fall in love with a particular stock. But you know, when you're in a stock that goes from $80 a share to, let's say, $160 a share, it's very exciting and you can get very emotional about that, because our goal really is to repeat that process as many times as we can, well, quite frankly, for the rest of our lives. And what I found is a lot of people really don't want to break up with that company if the stock has doubled and all of a sudden revenues fall. Why? Because you're emotionally involved with that stock. And you know what happens when you get emotionally involved and you start to fall in love. They say love is blind. So we don't want to be blind in the stock market. This is all part of having a discipline and knowing when that particular date is over. Another strategy I actually like is buying shares of something, let's say XYZ stock, at $80 a share. The stock doubles to $160. I can pull my initial investment dollars totally out and let my profits in the stock continue to work for me. Now, there are certain times in which I do this, and there are certain times on certain stocks in which I don't. I can't give you a specific answer of when to pull out your initial investment and let your profits rise, because it depends on the stock and it depends on the market. You see, the stock market is always changing. Although we're seeking to duplicate the same strategy over and over and over again, if you're going to handle your money on your own, you must study the market, or you must follow someone who has more experience than you so that you can learn and adopt their style. So I hope that some of these ideas, the idea of what's your style and the idea of not gambling on a regular, consistent basis because you're following a discipline makes sense to you. If you can set some financial goals, learn what your style is, stay away from penny stocks, don't chase marijuana stocks, that's one, and learn to keep things simple, you will have no problem doing very, very well for yourself in the market. So if you have money in the market and you're a member of WITradeschool.com, remember these words. What is your income target this month, right? Is it $2,000? Is it $3,000? Or is it $5,000? You have to decide that. And if you're starting with, let's say, less than $5,000 to start the investment process, then my question is to you, how much can you commit to wealth building until you get to the point where you can start generating covered calls? Only you can decide that figure. But I'm telling you, for everybody who's in my program, as long as you keep an open mind, you will have financial success. Why? I've seen it, I've done it, and I teach it over and over and over again. Remember, wealth is nothing more than a series of positive habits. I believe in you, and I know that you can do it. Hey, that's it for this episode of Trading Stocks Made Easy. It's Tyrone Jackson, the Wealthy Investor, saying keep an open mind, happy trading, and I'll see you soon.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.